Oh, hello, everybody. Sorry, we were having some technical difficulties. I'm actually having technical difficulties talking, but today we were talking about the housing market like we do every single week. But we're going to be talking about what they've been saying, which is it's possible we're going to be seeing 5% interest rates sooner than we think. Who knows if that's going to be the case or not? Because nobody has the crystal ball. The other thing that they've been talking about is Zillow changed their estimates recently on how much they feel like the housing market is going to increase in 2021. And I know that you guys had a bunch of questions about mortgages. So I have the mortgage man, the nicest mortgage man on the planet, who knows so much about mortgages that I couldn't wait to have him on here again. You guys might remember him because he's been on the street before. So if you have any specific loan questions, please be sure to direct it to my friend Trevor Smith. And forgive me, everybody. Go ahead, Eddie. Put Trevor up. I guess I'm going to go ahead and add him to the stream. Trevor
Hey.
Smith. Hi, everybody. Say hello.
Hi, how's it going?
Good.
I'm so excited to be here.
Oh, good. I have a bit of a cold, and I'm sorry. I don't have the plague. I don't have the plague. I just have the ordinary kind of sickness. But because of that, I wasn't able to have my good friend Tanya Cool in the house. I wasn't able to have her here in my house because normally she's sitting right next to me, and I'm like, I'm not going to give you the ickness, the icky poo-poos.
Yes.
That's just not going to happen.
So I'm down the road.
Right? She's down the road. So Tanya is in Pittsburgh. I am in Louisiana. Trevor, where are you in?
I'm in Charlotte.
Yep. So we are sprinkled throughout the United States, and we can answer your questions to the best of our knowledge throughout the area. We have some articles that we're going to be talking about. One of them was this one by NPR. Eddie, if you want to pull that up on the screen, if you can, I will do it myself. Let's see if Eddie can get that up there. Eddie's having a time. Eddie.
Mr. Smallhorn.
Oh, here we go. First-time buyers are getting squeezed out from investors. May I say that I've been saying this for the last 2 years and everybody thought it was crazy. Record high home prices and low inventory were already making these things harder for first-time home buyers. But new numbers have shown that investors are driving up even more away from home ownership. Investors are coming in and pushing out first-time home buyers, says Lawrence Yun, chief economist for the National Association of Realtors. He said the percentage of home sales that went to investors rose 22% in January, up 15% from the year earlier. Number one reason why investors invest in real estate. Do we know the answer? 1, 2, 3. Inflation. Meanwhile, sales for the first-time homebuyers fell for 33% a year ago, down 27% in January. Under more normal conditions, first-time buyers would make up about 40% of sales, says Young. There are a couple forces at play, but a historic shortage of homes for sale has been pushing prices higher, resulting in multiple bids on homes, and that given a huge advantage to investors and the wealthy individuals that can afford to offer cash. Here's the thing. I'm going to put in my 2 cents, and I want to get your 2 cents. Investors buy up the least expensive, smallest houses so they can go ahead and rent them out. That's what they do. And this is happening in many markets all over Atlanta. It's become an issue. This was an issue in Austin, Texas prior to the pandemic. And I was pointing that out years ago. And now you've seen what happened to Austin, Texas. All this does is drive up the price. We're going to be seeing a lot less first-time home buyers being able to purchase a home, something I've been talking about for quite some time. What do you have to say, my friend Trevor Smith? Since you're on the mortgage side, I want to hear your side of the things.
Oh boy, yeah, investors are definitely. I don't think they're definitely becoming a problem. I don't think it's a gigantic problem, but it is something that's going to continue to be a force that first-time home buyers and even second-time home buyers are having to deal with. One of the things when you look at a lot of the top hottest cities, like you mentioned, Atlanta, Phoenix, Austin, places like that, one of the common themes that that I found when doing the research is, they have anywhere from 30 to 50% of the homes in certain zip codes in those cities are owned by investors now. And it's like you said, it's the lower priced portions of the city where they can come in and try to scoop up any deal they can, especially with rent prices going up. And so it's definitely making things a bigger problem.
And that's the thing, though. And that's the thing that makes it so terrible, is that people that, they do have a job, they could qualify for a loan, but all these investors are taking it up. Like they can't compete against that. That's not right. Tanya, you're in the most fortunate city. I almost want to keep it a secret. Pittsburgh, Pennsylvania. Like, you guys still have affordable housing. Like, you can
We
still buy affordable house there.
We
And not only
do.
that, it's tech related in your area as well. So I want your 2 cents.
I got people into 2-bedroom houses that were in the $70,000, $80,000 range, and they're not tear downs, they're not dilapidated. People moved right in. They did nothing. They were dated places, but they were habitable, and they were in good condition. They didn't need roofs or windows or anything like that. And I have been on my listings, I've gotten investor offers, and they can be better, but one question I always ask the buyer's agent is, what percentage of under contract to close rate do you have? So they'll put tons of these properties under contract, and they only intend to close a certain percentage. So if you present that to the seller as, this is not a sure thing, whereas this first-time home buyer is much more likely to, then it becomes you have a bigger picture and you can contextualize it. So it's not just about price, but it's about terms.
That is a trick that investors do. What they do, like you said, they'll put contracts on 15 different homes. They haven't seen it yet. They see it hit the MLS. So they're like, go ahead, put it in there, get it under contract. So that way, when they have that grace period, they can cancel the contract. That's when they go and look at the properties, see how much either they can flip it for, or what the rent, what they could get for rent. And then then that's when they push the numbers, and they're like, this isn't going to work. And they just go ahead and cancel it. Yeah. Yep. They do that. I can't say that I haven't done that for an investor before. That is a real thing. Sorry. It is a real thing. But that's a smart thing. That's a smart tactic.
Yes, because then when I present this just happened on my listing last week. It was, and the owner knows this, and he gave me the license to share this. It was overpriced to begin with. When we priced it correctly after 45 days, then we had 3 offers last week, and one was pretty shaky. One was excellent. Those 2 were first-time home buyers, and one was an investor offer. And I presented to him, because I asked the buyer's agent what percentage of under contract to close rate. And I asked her so quickly that she just said she said 80%. And then she's like, well, actually, and I was like, no, thank you very much. Bye.
Thank you.
Because I got what I needed. So I said, there's a 20% chance they're not going to close on this. And the other 80%, they're going to railroad you after the inspection and say, I want $10,000, $20,000, $30,000. And now you feel beholden because it's a cash offer.
Right. Yeah. Yeah. Cash doesn't mean always good. Yeah. But you know what, the biggest topic of conversation, and Trevor, the whole spiel about this is interest rates. We have another article. We're going to be talking about that. So let's pull up that article if you get a chance there, Eddie, about interest rates, because it's on everybody's mind. Everybody's concerned about it. As they go up, they have a feeling that the interest rates will go up and home prices will go down, but that doesn't look like it's going to be the case. I have some feelings on this. Wall Street predicts as many as 7 rate hikes this year. Here's what it means for the markets. Okay, hold on. So sorry. I am so sick. Go ahead and scroll down a little bit more, baby. All right. I said baby. Yes, that's my husband in the background. In recent days, after Investment Bank has published the revised forecast that they predict the same thing for the Federal Reserve will raise rates at a quicker pace this year than anybody would have anticipated weeks ago. The latest Goldman Sachs, which is now seeing 5 rate hikes this year, up to 4 joining I don't know how to say this. Deutsche Bank at that number. I was going to say something worse. Bank of America thinks that central banks will be aggressive. It predicts that a 25 basis points hike this year for one each of the remaining federal open market committee meetings. This will bring the federal funds to the rate to 1.75 to 2% by the year's end, essentially hiking up borrowing costs for Americans after rock bottom lending rates. So if they're saying 2%, so are they saying that we might get to 6%?
Oh, okay.
What does that mean, Trevor? Tell us what, like, that reads like stereo instructions. Tell us what this really means.
Yeah. And so and years ago, like when I was military, like I had no knowledge of any of this stuff, and it's only been through a couple of years of digging into it. Like it's finally like, okay, like now all this sort of makes sense, right? So the first thing is, what people really need to understand is the Fed funds rate is not your mortgage rate, right? So when they talk about raising it, and let's say they do 7 times and it goes upwards around 2%, that doesn't mean mortgage rates are going to go up 2% by the end of the year. So Fed funds rate kind of separate from your mortgage rates. But what people are concerned about is, what is the Fed doing to fight inflation? How are they going to control other things going on in the economy, whether it's buying mortgage-backed securities or not buying them, or raising, the Fed funds rate? Because ultimately that could impact your mortgage rate because of what happens in the background. People are concerned. So we know, if you remember December, right? The Fed had their big meeting, and that was the first time they were like, "Oh my gosh, inflation's here! It's actually happening." Even though everybody, and so they said, "Hey, we'll maybe hike rates 3 times going in 2022."
Right.
And then, as we saw January happen, like some of the inflation numbers started trickling in, and it was a lot higher than people were expecting, even than what the Fed was talking about. And so really that is what has driven mortgage rates so quickly, so up so high so fast within the past month or so, is because of this fear of not knowing, like, is the Fed going to be able to get inflation under control? So that's kind of what's going on behind the scenes when we're talking about the Fed raising the rates.
What do you think is going to be like? There was, at the beginning of this year, I had a bunch of people on here, and I had them guess their number of what they thought the year end would be for interest rates. And at that time I said, I believe we're going to be ending at 4.5. And everybody's like, oh, no. Everybody's like, no, it's going to be right under 4. There's no way they'll get it all the way to 4. No, I think you're guessing really high. I'm like, I know, I have a feeling it's going to be 4.5. So, I mean, I'm not like, of course, this is just a prediction. This is what, like, as we read numbers and how people talk, what do you think the year end? This is not you talking, like, everything. This is your guess. What is your feeling of what mortgage rates will end up at the end of this year?
My gut tells me we'll be in the high 4s, close to 5% by the end of the year. And we may see a transitory, spike above that and settle back down. But I think we'll be somewhere around 4.75, 5% by the end of the year. And obviously there's a lot of things that factor into that. We've got stuff going on with Russia, we've got inflation, we've got all these other factors, and, who knows, but it's interesting to me because even as recently as yesterday, there's still websites out there that are publishing news articles about mortgage rates, talking about how maybe mortgage rates will hit 4%.
I know.
We hit 4% like last month,
I know.
So,
they use antiquated results. I'm like, where have you been?
Yeah.
Someone needed to proofread this before they put it out the publish button.
Well, what's happening is, I think some of them are referring to like Freddie's rates and stuff like that, Freddie Mac.
Correct.
And Fannie. And what they're doing is they're looking at survey data, and the survey data is not, it can't keep up with how fast the market has been moving. And so they're citing that without doing any actually scholarly research on top of that to go like, oh, wait a minute, maybe we should see what the real stuff is saying right now.
Jeb Smith last week was showing, was it Jeb Smith? Yeah,
Jason.
Was it? No, Jason Walter. Sorry. Yeah. Totally different person. Jason Walter was here last week, and Jason had showed like how he figures it out, what the true rates are, the little charts he uses. And I was like, that was smart. Look at you.
The site he uses is a site that I recommend to a lot of people, because
what's that site?
It's Mortgage News Daily.
Mortgage News Daily. I'm going to type that in the chat.
So they, so that site, they give a pretty realistic representation of what, average interest rates are, along with the number of points associated with how much you'd have to pay to get that rate. As opposed to if you just go in and type, best mortgage rate right now, you're going to get all kinds of garbage, and I found a lot of
they
that
want
stuff.
you to fill out the form.
You got to fill out a form. And, I even get ads popping up in my Facebook feed for like, hey, get your VA loan now for 2.5%. I'm like,
I was just going to tell you about that.
You look at, some of the comments on the ad, and this is what's happening. These are advertisements that were created 3 or 4 months ago, and they still include like buying down the rate and all these other, maybe it's a 15-year mortgage and things like that. But because they created the advertisement on a specific date, they can keep it in there because they have disclosures that say this rate may no longer be available when you go to apply, but it gets people to click because they're like, wow, like I heard rates were at 4, and if I can get 2.5, like I should do that.
Right. Yeah. I'm going to read the super chat really quick, and then I'm going to ask you about buying down a rate. Question for 2020 and 2021 respectively. What is the lowest income W-2 you personally closed on a single family home for? What that would be you, Trevor.
I don't know. It's
I can save you, Trevor, because I know off the top of my head, because it was actually my tenant of 4 years who bought a house in the $60,000 range, and his W-2 income was, I think, $44,000 or $46,000.
Well,
how was he able to get a loan though at 60,000? Who did a loan for 60,000?
He got it he did FHA, and they put it through.
The loan originators here always tell us we can't do loans under $65,000.
Oh, really?
Well, that's because they feel like they're not making enough margin on them, so they don't want to be. So they don't. I mean, it's like working, trying to sell a $20,000 house as a real estate agent. You're like, it's not really worth my time. So that's what a lot of mortgage loan officers will tell you.
Wow. My mortgage broker was just like, okay, he takes the 800 with the 80, and he knows.
Yeah, or it might be a company policy that they have too.
Right. They'll flat out say they can't do them under $65,000.
But here's the thing, to answer that question though, like, for the lowest income, you could personally, so that we have, depending on the lender, there's lots of lenders. We have programs like this where somebody has, zero income, but they have $2 million sitting in the bank, so we can do different programs like that to qualify somebody to purchase a house. And again, like Tanya was saying, it's very market dependent too. So a lot of the markets that I'm working in, it's average home prices are, 600, 700,000. Most of the loans I do are over $500,000. So,
well, look at you, hotshot.
It's not
we don't
me.
Have that here.
It's the market.
No, I know. I know. And that's like the whole thing. I'm like, is a dream of owning an affordable first time home dead? I'm like, I think for many people it is. I mean, think about it. If you put it to you this way, like, let's just say the $250,000 was the starter home price. Think how many young people could afford a $250,000 house. When you word it that way, then it seems a lot more realistic to what's actually going on. It's extremely expensive for people if that's first starting out to like get into a house. You have to be in your job for like eons to be able to save for a down payment and be established in that job to even before to get into what now is considered a starter home that would have only been like, I don't know, $150,000 2 years ago. So I feel bad for people. I really do. And you want to put up another question? I know there's been some that have come in. I'm so stuffy. So sorry, y'all. I sound awful. Jerry Prusa says, who are investors, mega giant faceless companies or mom and pop? We're not talking about the mom and pop ones. What I'm referring to investors, I'm referring to like, you'll even see them. There's some of the biggest investors in the country that are like you've heard all everybody's talked about BlackRock, but there's also Blackstone. There's mobile home investors, so they'll buy up whole manufactured home parks, purposely inflate the rents so for the actual land underneath it, so it forces those people out so they can actually basically foreclose on their manufactured home that the people have been paying on, but they've only been paying rent, but they have no place to go and they can't afford to move them. So now they've acquired a house basically for free, and then they can charge whatever they want to the next person that comes in, and they just got a house free and clear. You know, there's tons of big companies that buy a lot of houses, a lot.
There was an interview with one of the company, I forget who it was, on CNBC yesterday. It was like a 3-minute video about how they bought 1,500 homes, I think, in the last quarter. And his comment was, "I wish we could have bought 1,500 more." You know,
Yeah,
so
they're offsetting inflation.
yeah, it's interesting
crazy.
to see. I will say, for the mom and pop investors, from a loan perspective, like, we don't, obviously as a loan officer, I'm not dealing with the mega gigantic, faceless corporations, right? And I'm not seeing the cash buyers because they don't need the loan, but we
Right.
are seeing more people come in to purchase either a second home or dip their toe in the water, to purchase an investment property. The second home thing is started, I think, also to become more of a trend now, especially for people that aren't sure. They're like, I don't want to maybe buy in this market as a primary residence because they're still afraid, things might crash. And so maybe they go in on a second home that they can rent out and, help pay part of the mortgage, and they don't have to live in it full time. And so we're seeing a little bit more of that now too.
And I will say that we haven't seen as many houses that would have been like what they thought there was going to be this big, when the baby boomers started to retire, they were going to sell their houses. So we were going to see this wave of homes that hit the market. Well, the actual trend is that baby boomers are like, yeah, I like my house. I'm just going to stay here to the day I die. I'm not moving. And they weren't expecting that retire in place. So they have bought extra houses, like those baby boomers. They're like, oh, I'll just go ahead and get a HELOC, or just enough money to buy or put down for the other house, and I'll just buy another one closer to my other grandkids. So they're not selling their houses, those little houses they've made a fortune on. CC Moon says, everyone has that has a mortgage under 100K a month. Cheers. I don't have mine under 100K a month. Is yours under 100K a month?
1,000.
Yeah. Is yours under 1,000?
Are you talking to Trevor? Trevor, no.
Yeah.
No.
My townhouse was that my husband and I bought with a VA loan in 2016. $850 a month, taxes, insurance, everything.
Feel better, Kristina. Thank you. I'm trying my hardest to keep it together. Our first mortgage was $1,250, and I thought I was going to cry every month. I was like, I don't know how we're going to do it. So like, all right, it's beanies and rice. That's what we're having for dinner tonight. That's it. But we did it. Killian has a question, but it just says question. Where's the question, Eddie? There it is. I've heard that a lot of investors are 20% of more or more of foreign investors. Yes or no? In my personal area, they're not foreign investors. I've not seen a lot of foreign investors in my specific area, but that doesn't mean that it's not happening. No, like if you go to Hawaii, they're like all the investors are pretty much foreign investors. If you go to places in Seattle, there's a bunch. Canada has had the biggest surge of foreign investors that bought properties. And even before the pandemic, it's a real problem that caused housing prices in Canada to go up exponentially. But I have not personally seen it in my area. Have you seen it in your area, Tanya?
No, the investors are like out of state. Well, the number one investor is from Metro Pittsburgh. They're like smaller investors. They have under like 50 or 100 units. And then the second tier is out of state investors like California or Illinois, like Chicago Metro. I have not seen any foreign investors in
Eddie to the rescue with an article right here. Look at that. A strong recovery in 2021 in the U.S. commercial real estate market overall attracted foreign investors who purchased an estimated 57.7 billion in U.S.
Oof.
commercial real estate in 2021, up 49% from 2020, according to NAR's 2022 Commercial Real Estate International Business Trends report. Well, looks like that's where they're going. That's where they're headed, is the commercial market. I mean, it would be almost impossible to know if there was a who was purchasing, if it was a foreign investor, because it's always a company name with
Mm.
residential real estate.
There was an article from the Mortgage Bankers Association recently about the commercial activity picking up, but that also includes multifamily. But when I read through and kind of looked at the percentages, like that article was saying that Eddie just had up, a lot of that money is going to the retail, side of things, or the commercial office space. And where those foreign investors are investing in terms of residential, it's large multifamily, like apartment complexes, things like that.
Mhm.
Not thousand, going out and buying 1,000 houses.
Right.
Uh-huh.
Right. That
Eddie,
makes
I just
sense.
read that part. He's so good. He tries so hard. He's in the background, he'll like pulling it all up together. He's like trying to watch the chat. He's pulling up articles. He's answering questions. So I look like a superstar. He's a good guy.
Producer extraordinaire.
Yeah, he is producer extraordinaire. Debbie Brady. My head is not right. Debbie Brady, your dreams coach, also moderator extraordinaire. Says, question: how long does it take for our mortgage rates to go up after the Fed increases? The Fed may not may increase. That doesn't mean mortgage rates are going to go up. Am I correct, Trevor?
Yeah, I mean, just look, Fed hasn't touched rates, and mortgage rates have gone up over 1%, in the past month. So,
Uh-huh.
again, people are, the next big meeting for the Fed is coming up March 16th is their next meeting. And that's when people are expecting to see that 1/4 to a 1/2 point rate increase from them. I think when that happens, based on where rates are and how fast we've moved, we might actually get a little bit of a reprieve in mortgage rates. We might see, maybe 1/8% decline, because
Okay.
all of a sudden people are like, okay, the Fed's doing something. And now, like, they have this sense of like, there's maybe this thing's gonna, inflation's
Urgency.
going to
Mhm.
inflation's going to get under control. So let's everybody calm down for a little bit, and rates will kind of stabilize for a little bit, and then we'll see what happens with inflation going forward.
Have you seen more people getting pre-approved as the rates have gone up? Have they been working harder to get pre-approved in your area there,
So
Trevor?
this is something like we're trying to advise real estate agents all the time, because most people, you're too busy with other stuff in your life to pay attention to interest rates every day, right?
Uh-huh.
But you're trying to find a house. And if you're not watching it when you're pre-approved for 350,000, and a month later, you may not be pre-approved for that. And so what we're doing
Right.
is trying to get these agents and us, with the people that I have in a pre-approved status, I'm reaching out to them proactively to let them know, hey, like, interest rates have gone up. In most cases, the individuals that I'm working with, they're still pre-approved, because I never try to pre-approve somebody right for their maximum limit, because there's
Uh-huh.
just too many factors that could make the deal fall apart, and you could lose even more money. So it hasn't really impacted too many of the people that I'm working with, but it's
Uh-huh.
definitely something that I know is happening out there, because I hear about it from real estate agents, or from a buyer that goes under contract, and all of a sudden thinking they're going to have one mortgage payment, and it's been 2 months since their pre-approval, and they're like, what do you mean my mortgage payment's $250 higher?
Correct.
Mhm.
Like,
Yep.
so
And the people that I really like, I'm sweating for, are the people that have put a contract on a brand new house and they're waiting for it to be built, right? So they've been pre-approved, let's say for 350,000, and they're
yeah,
buying a house that's at 340,000, and they only have a little bit of window left, right? There's only a $10,000 window left. They're still waiting for it to be built. At any moment, that builder can change the price of the house because the cost of building materials have gone up. So by the time of closing, that house that they put under contract for, 340,000 now may be 375,000, and they can't afford to buy the house that they've been waiting for all these months. And homes are taking so much longer to build. Nicholas Roberts, welcome for being a new YouTube channel member. Thank you so much. You now have a nice little icon by your name when you comment in the chat for being a channel member here. I appreciate you. Thank you so much.
Well,
Good stuff.
I'm so sorry.
Yeah, I mean, so with those people purchasing the new construction, you know, underwriting standards, it's kind of a line in the sand when it comes to your debt to income ratio. It's not like we can say, well, it's only $20 a month more, so we'll make an exception for you because then that's fair lending, you know, practices and stuff. So you're either going to meet the ratio requirements or you're not. So even if that mortgage payment goes up by just a little bit, if you're beyond that line in the sand, you know, unfortunately that's a tough spot to be in.
Yep. That DTI will get you every single time. Ooh, excuse me. I'm like I feel like all my bodily functions are coming out at one time. Good Lord. I'm so sorry. I saw that there was a super chat that came in. If you want to go ahead and pull that up, Eddie, I'd appreciate it. Do you want me to grab it, Eddie? I feel like Eddie's snoozing. I think he might be sick too. Lisa Fields Hester says, would it be smarter to buy land now than wait to build later as a first-time home buyer as a single family income? What is your advice there, Trevor?
I think if you can, it's really going to be situation dependent because like number one, like it's tough to get loans on land, right? You know, only certain lenders are going to do that. Land isn't really higher interest rate, you know, larger down payments, or you're gonna have to pay cash, you know. And then in terms of building later, you know, I think you're probably going to be better off finding something now if you need a home, because you know, what is your situation? Are you renting right now and your lease is coming due, expiring, you know, this summer? Maybe the landlord's thinking about selling out the property from under you, or they're going to jack up your rent $300 a month, you know. So you could wind up stuck with a piece of land with no house on it. And now you're trying to sell that land because you need the cash for something else. So it's going to be very situation dependent.
And usually land, I'm going to let you know right now, to resell is a lot more difficult than actual property with a house on it. So yeah, bless you. Thank you. Thank you, Charles. I appreciate it. Everybody knows I'm sick. You don't have a lot of land for sale over there, do you, Tanya? No,
hardly any. Hardly any.
Yeah,
I mean,
you don't have raw land in Pittsburgh.
No, there are some farms, like small farms that are being sold off to make developments, and that's even in my school district. And I live 7 minutes from the border of city of Pittsburgh. And so. Oh, crystal ball, CC Moon.
Yeah. CC Moon wants to know, what does the crystal ball predict
for 2023?
Oh, do you know what it says? We're in for another wild housing market through 2023. Yes. That's what it says. You know what? And I believe the crystal ball on that. I believe that we're going to have another wild ride going on through 2023. You know, the thing is even after the housing crash, when it started in 2007, there were people that were denying that this was happening at that time. They're like, oh, it's just a slowdown. It's a correction in the market. And I was a young buck at that time. And I was like, this doesn't feel like a slowdown or correction. This feels bad. And that's why we sold our house. We sold our house in 2000, like before they said it was crashing. And we moved here to Louisiana. So if I start feeling those spidey senses again, your guys are going to be the first ones to know it.
Gonna bug out. Just gonna bug out.
Yeah, get your bug out real estate bag ready. Well, Millennial Architect gave with a $1.99 super chat. I appreciate you so much. Thank you so much for that. But you know, I have to ask you this because you see this all the time, Trevor. You've seen so much hype over the last year, talking about, even into this year, talking about real estate collapse, real estate crash, real estate bubble. What do you feel about the real estate market this year? Do you feel like it's crashing, crumbling, bubbling, collapsing? Do you see that happening in 2022?
No, I think home prices are going to keep going up. I think certain markets are going to see prices not appreciate as fast as they have been, but they're still going to go up because of the inventory challenges. And I think eventually, it's going to take a couple of years before we start to get to like a more stabilized market as people get comfortable with, like, okay, I need to go buy a house and mortgage rates are higher, but that's the new reality. And let's do this. So it's going to take some time, but I don't see a crash coming. I just, barring some unforeseen global event, it's not, mortgage rates by themselves are not going to cause a housing crash. The foreclosure wave, I know you've talked about this, like the foreclosure wave is not coming, so
Right.
there's not much that would cause home prices to collapse.
At the beginning of all this, when all those people got into foreclosure, I was the first one to go, holy cow, this isn't good. Because that as many people signed up for that forbearance was like, it was at the same inline amount as how many people were filing for short sales and foreclosures during the last housing crash. I went, oh, this was all at once. This is terrible. And I was like, I was showing it, I was very concerned, but then they kept allowing people to do that forbearance.
Yep.
And it actually was a good thing for people that were trying to save their home. Terrible thing for the housing market for as many people that wanted a house. But yeah, don't, there's going to be no crash. And Tanya I already know, she agrees with me. There's no crash this year. No year.
Well,
Unless,
and
go ahead.
I talked to people who did forbearance because I was like, who are these people doing forbearance? And one of my neighbors was like, well, I did it. And I was like, while it was going on, and I was like, why did you do it? She and her husband have very stable income. Their 2 kids are in their 20s, grown, and they have stable income. She was like, why not? I figured it was a way to hoard more cash. I was like, mind equal blown. And so that completely, and she and her husband have over 50% equity in their home. So it was just, people look at it like, oh, it's there. It's an option. I'll do it.
Yeah. We just helped somebody close on a house a couple of weeks ago. It was like a $500,000 purchase, but he had been in forbearance on his existing house, and so
it's crazy to me.
I mean, if it was there and it was an option, I think some people did take it, but I've looked at the numbers and it's not, there's not a wave coming.
I do want to say this. Jerry Prusa said, Eddie Smallhorn, welcome. Eddie, Marcel was a problem this afternoon, huh? I'm going to have Eddie pull up the next question because I want to show everybody something in just a second. So, Eddie, go ahead and pull up the next question. Well, you can pull me out of the screen and then I'm going to show everybody a surprise. I'll be right back. It's exciting. Marcel has a friend. His name is Walter. Walter, I call him Pancakes, and we just rescued him, and he's the love of my husband's life. Aww. This cat snuggles with my husband with the burning intensity of 1,001 suns. He revs his engine all night long and loves all over Eddie. This is my husband's cat. He is totally smitten. He's super chill. He's the coolest cat you've ever seen, ever. I love this cat. His name's Walter. He's a ginger.
Hi, Walter.
That's awesome.
I know. Like, I picked out this cat and it jumped right into Eddie's lap. Killian one says, question. I could have gotten a 40 to 50K loan if I had needed. What shocked me was I could have gotten a mortgage for a whole house of 325 on a fixed Social Security. 325,000. Oh, wow. I don't know what your Social Security is. I mean, that's always debt to income ratio, right?
Yeah. Yeah. If you don't have any debts, if you've got a fixed income that's guaranteed, it just depends.
Here's another surprise too, Killian. You want to know something really cool? My dad is in his 80s. He could walk into a bank right now, a lending institution, and because his debt to income and his credit score is amazing, they would still to this day give him a 30-year mortgage. He's like, boy, they have high hopes for me, man. They're like, obviously they don't ask for medical history, like they're going to give me a 30-year mortgage. Susie says, Susie Evolutionary says, if I was to buy land for cash now and wait on a manufactured modular home to be ready, if I did that in 6 months, just the loan for half of the manufactured just a loan for the half of the manufactured, 11 months lease left. What do you think? Thank you for all you do. If I was to buy land for cash now and wait on the manufactured modular home to be ready, if I did that in 6 months, just a loan for half of the, I wouldn't do that. I'm going to tell you why. Because just like new construction right now, modular and manufactured homes are taking just as long as well. And you want to be able to roll in your manufactured loan in with the piece of land itself. So you have one mortgage instead of two separate mortgages. Mortgages for land is going to be a lot higher than it would be if you had it rolled together, because then it's considered real property. I would try to see if you can get, if it's something that's on the lot and you could put on there, I would do that. That would be my advice. What do you say, my friend Trevor, since you're the low man?
Yeah, well, sometimes, I don't know if you're talking about a loan for half of the manufactured, half the loan size, I guess. I don't know, a lender that will do a loan for half of a property, so, I
Right.
mean, and they're like, if you have cash for the other half, obviously, but if you're planning on financing the rest of it later or something, I'm not sure. But yeah, I agree with you, with the supply chain issues and stuff like that. So not
Well,
recommended.
the manufactured home companies have said like they're like minimum 12, 15, 18 months. Some of them say 22 months for a manufactured home.
22 months.
Yeah, because they're so far behind and they can't get enough materials, and they have spent out everything they had already in the plant. So they usually have like a good supply of materials on site, but they've it's maxed out. They got nothing left, and they're just waiting for
Windows.
their supply.
Windows are a big one right now.
Windows, roofing supplies, roofing nails, the brads that hold down the roof for hurricane areas, hurricane zones, those little metal pieces that hold down the roof, those are all in short supply. So yeah, like look how chill this cat is, man. He is like, he's
Walter.
moved. Walter's the best. Now the other cat would have been all over the place walking. I think he's done now. He's like, I've had enough of you people. Thanks, pancakes. All right, question. Millennial Market Talk says, how do you feel about builder lenders pushing mortgage bankers out of with the low inventory on pre-owned, and the only place for buyers to go is new construction? So how do you feel about that, Trevor?
We're not losing a lot of business to builder lenders. Most times the builder lenders rates are a lot higher
Right.
than what you can get on the market. Because, they try to, hey, if you use our builder lender, we'll give you a $10,000 design credit or something, And so I think sometimes that pulls people in, but I think people are smarter now about that type of stuff, and they shop around. So I don't know that they're necessarily pushing too many people out. And still the new construction is still a relatively small percentage of the home sales, even though they are ramping up the volume.
I want to answer this really quick. It says, I wonder how long boxable home wait is now. I know that they're completing some government construction first, and then they're going to be getting to the people that are currently on the wait list. The wait list is long, just FYI. I don't know if you're on the wait list, but the wait list is long. And I would caution you, if anybody's like looking at the lenders in the builders, like the builder lenders, I would caution you and see if they can be competitive, because sometimes they'll give you some incentive, like they're going to give you like $4,000 in closing costs. Talk to a lender that isn't on the side of the builder themselves, because it may look like they're giving you $4,000, but they're getting their monies one way or the other. So talk to another lender to break it down where they're pulling this $4,000 from, because there's no free lunch. No one's giving you $4,000. So have them break down that loan to what that actually means. So yeah, look, 4 or 5 weeks on wait on windows.
Mm-hmm.
Question: Miami average price of a home is $600,000. Is that sustainable? I don't work the Miami market. Maybe I could have somebody come in here, But I will say this because I used to live in Florida. And when the average home, the starter home price in my little area of Orlando was 135,000 at that time. And that's what we went in at 135,000. That was our first house. And when I saw it went up to 210,000 in 3 years, I knew we were in trouble. I knew we were in trouble because there was the local economy could like the first time home buyers weren't going to make it. I don't know. I think I would have to talk to somebody specific that knows the Miami market for me to be able to answer that because I don't know what average incomes are there if that would support the $600,000 price tag. I don't know. This kid, hello, this kid. Can a seller refuse to sell to a corporate buyer, and does that corporate buyer have to disclose? What do you say, Tanya? You're nodding your head. Go ahead.
And yes, this may vary by state, but in Pennsylvania, a seller can refuse FHA, can refuse VA, can refuse cash, can refuse a corporate buyer. And does the corporate buyer have to disclose? It's on the sales contract. It is their name. And then I have occasionally gotten offers where I'm like, that name sounds familiar. And then you Google the name, and it's easy to just, even if they're doing the shell game where they're trying to hide their assets in different LLCs, you go to where you go to work with magic, and you can find out it's a corporate buyer. And yes, and people do all the time, especially when things are equal. Sellers will they remember what it was like to be a first-time home buyer, and they will take the first-time home buyer or just the regular human being offer.
Sometimes, but I will say this before you get to this next one, Eddie, with here in the state of Louisiana, if someone offers you cash, no contingencies, you cannot refuse if it's above the asking price. Like, so if your house was, you were selling it for $450,000, they were buying it cash and there was no contingencies, you cannot refuse it because you've met all the conditions that the sellers were asking.
Huh. I learned something new today. So obviously, yeah, very, very state by state dependent.
Yeah, that is true. But Louisiana is always a different state than the rest of the world. We're a different planet. We're an island on our own.
Parishes, not counties.
Yeah, we live in parishes. We have parishes, not counties. They don't exist. There is no Louisiana county. At home mom boss says, "Are you seeing any more online closings? Are you seeing more online closings?" I'm not sure what you mean. Are you talking about like virtual buyers, basically people that are buying houses from another state but didn't actually step in the house? If that's what you mean, I've been seeing that since 2017. That it was started way before the pandemic and it increased during the pandemic. How about you there, Trevor? What do you say?
Yeah, I'm not sure what the question exactly means. But I think, like in terms of actual closings on the transactions, those are still happening at the standard, title company or attorney's office,
Right.
or sometimes, we're sending mobile notaries, out to take care of that. If you're talking about online lenders, like that's been going on for a while too, everything, like you never meet with your loan officer, everything's done online. So.
And Tanya, I know that you do a lot of like virtual showings and everything to get the house done. You even do like virtual inspections. I remember you did one of those when I was talking on the phone the other day.
Yes.
So,
so online closings, if they mean doing all the prep work for the house virtually, then yeah, that's a big thing. And I've been doing it since I started in the industry because I did military relocations. They were buying houses from flip books in the 90s,
Right.
They were buying on Skype before anyone else. But if they're talking about like remote closings, yeah, they happen all the time. Like someone goes to a mobile notary or AAA or their credit union and their paperwork was FedEx to them and they take the whole FedEx envelope there and they sit down and the notary stamps it and they fill everything out and then there's the prepaid envelope and they do that. I mean, I just had to do one the other day. The seller was in India for work for like 2 weeks. So.
Oh, well, we learn something new every day. Tymo says, since we have no control over increased interest rates and home prices, what are your thoughts on future valuations appraisals of these homes? 1, 2, or 3 years from now. That's the scariest part. So that, like, I'll give my 2 cents and you guys can give yours. That's what happened before, right? So during the last boom of the housing market, houses were going up like 10,000 every week. Every time it turned around, it was another like the house across the street, another 10,000. The house of the street, it was another 10,000. And those appraisers were just appraising for whatever people wrote the contract for. They are a lot more cautious on appraised value than they've ever been because they got themselves into some serious hot water with that. There, a lot of appraisers got sued. Some of them got out of the business. You know, it was crazy. The control over appraisals and how they evaluate them is a lot different than it was in years previous. And this gets stricter every year. I mean, banks used to have a specific appraiser, and they only called that one appraiser, and that was the only person they used to appraise their houses. That is no longer the case. They can't do that. So, what do you say, Trevor? Trevor, the man, about the mortgages?
Yeah, the appraisals. We're seeing more and more appraisals come in under value. You know, like I don't think appraisals are contributing to excessive home prices or speculation, because they're, you know, the industry standards to even become an appraiser now have become more challenging than they were, you know, 15 years ago.
Correct.
And so, you know, I don't think it's causing a problem. But I'll tell you a quick interesting story. So I had a VA client, and he was actually doing a refinance. The appraiser walks into the house, and the appraiser says, "Well, I just want to let you know, I've gotten some complaints filed on me for giving low appraisals before, because I just don't think this market makes any sense." And sure enough, like his appraisal came in about $100,000 low, so we had to appeal it. You know, but you know, I think to address the question, like these evaluations, these appraisals, they're protecting themselves. You know, they're going to use the data that they can find to support. And if it doesn't match what the sales contract price is, you know, they're okay with that, because they know there's always, you know, somebody's going to pay the appraisal gap, or there's going to be another buyer to buy it.
The buyers don't care. They'll flat out, they'll be like, okay, well, only plays for $450 and we negotiated $475. I'll give you the $25,000 cash, which blows my mind. When people do that, I'm like, are you kidding me? Like when this first started, I was like, these people are still stupid. I would never do this. And then it's so common now. I'm like, oh, whoops. I guess they weren't as stupid as I thought, but I would never do it. Go ahead, Eddie. Hi. Vertically not challenged. That's funny. Hi. I have land prices rose as much as housing? No. I would like to buy land to build on later as supplies return to normal. In my area, they have not increased exponentially, not even close to housing. Historically, they don't. What do you say there, Tanya?
We don't have much land in Pittsburgh, to be honest. And the land that does exist is part of a development, like a farm gets sold off. And so then they build, you know, like 50, 100, 200 houses. And the zoning requirements, they're not super stringent, but they do take time, especially with our stormwater situation. We do have a lot of stormwater in Pittsburgh, and as long as it's managed correctly. So we don't really have like individual lots coming around. We only have a couple of on your lot builders. Most plans come with their own 1 or 2 builders to choose from. So
Trevor, let me ask you, because like in my area, when it comes to land, just because the home prices have gone up, let's say 22%, that doesn't make land prices go up 22%. Not even close. Is that like that in your area? That's something that I've always felt like was typical throughout the United States.
So I think it's very dependent on the city or the zoning restrictions in the area. And the great example is that right now where I live, the town I live in has very, very strict zoning regulations on terms of like how, like population density, how many units can be built per acre. And so land prices within our town have gone crazy. Like we're now looking at an average of about $200,000 an acre just for the land. About a couple of years ago, it was about 100,000. So it's almost doubled in a couple of years. And it's just because because of the zoning regulations and the popularity of the area. But if I go outside of town limits somewhere else, like they're not necessarily seeing that. So it's very, very dependent on where it's at.
How much an acre did you say? How much is it per acre?
$200,000 an acre.
Dang.
Yeah.
Well,
Yeah, so
honestly, we're
yeah.
creeping that way. We're creeping up about that much too. I mean, it depends on how much that land is developed. If it's raw land, it's going to be cheaper. If it has some improvements, it's going to be a little bit more expensive.
Well,
if it has
what's happening now is so the zoning regulations have caused such problems, and it's not just our town. Like, I'm sure this happened in other cities too. That what's happening is in order for a builder to turn a profit, the cost of the land has to go up, and so what they're doing is they're coming in and doing all the groundwork to lay the foundation for the neighborhood, the streets, the sewer, all that other stuff, right? And then they're selling off the lots, and then you're bringing in your own custom builder to build your house. And so the places that are doing this, these are 7-figure properties, that are going up, which for the average, it's really driving up the average price of homes in the area, because most of the homes here weren't 7 figures a couple of years ago, like not even close to it. So.
Here's a question for the both of you. Joe asked, did you watch the Senate hearing on how institutional landlords are affecting the housing market on February 10th? If you watched it, any thoughts on it, on what will happen as the result? Senate Banking Committee holds a hearing on the role of institutional landlords. Go ahead and scroll that down. This is about multifamilies. We were talking about this in Clubhouse when it related to tiny homes. And the Senate Committee on Banking and Housing and Urban Development, Urban Affairs, held a hearing titled "How Institutional Landlords Are Changing the Housing Market" on February 10th. The hearing explored the role of the institutional housing providers, private and equity, play in the rental housing market. Prior to the hearing, Chairman Sherrod Brown held the listening session that featured renters from across the country sharing their experience living in rental properties and corporate owners. I'm going to give you my all of this looks good for people that want to be elected. It shows that they're doing something. But in my opinion, they do this because they want to be reelected. Like, we held a hearing about that and we've heard your concerns. They literally are going to do absolutely nothing. Absolutely nothing. Not a thing. They always it's all lip service. When they talk about affordable housing options, like the whole thing that came out with Biden was like he was going to do like, oh, we're going to invest 100,000 homes over 10 years. Over 10 years, 100,000 homes, affordable homes over 10 years. That is literally not, I mean, it's like, oh, it's laughable. It's laughable.
It's dropping the ocean is what it is.
Yep. Yeah. And
we're what, 2.5 million units short? Like, what is that going to do? Why even make anything come out of your mouth hole? Just, ugh.
And that's all it ever is when it comes to anything that has to do with affordable housing. Every single time they say that we're going to do something, we'll really look into it. We've had these congressional meetings about it. Make sure we've been addressing your issues. We've been listening, and it's all lip service. It's just a bunch of hokey pokey baloney nonsense. How do you feel about the builder lenders scooping up all the businesses from retailers with incentives in dangling carrots? I know nothing about this. How do you feel about this?
I think they're talking about, like we talked about earlier, like the design center incentives and stuff like that, and so again, like they're not really scooping up business, so.
Yeah, I don't think they are either.
Not one in my entire career, not one person that I've helped with new construction has ever used the builder lender. And the few who are like, well, it sounds good, but I feel like I know that they're lying, went through the whole process. And then 2 weeks before, and we're like, oh, hidden fees. And then they switched to the one that I had recommended them. Like, it's if it sounds too good to be true, it is.
Yeah.
Period.
Right.
Full stop.
I love when they give like, we'll upgrade your package in your kitchen so you get a nicer refrigerator. That's going to cost you an extra, $100,000 over your life of your loan, but whatever. You got a nice, good new refrigerator. 10,000 Miles says, question: what are the advantages of paying off a mortgage in this market? What is the advantages, Trevor? What is the advantage of paying off
peace
a mortgage?
Peace of mind. Peace of mind. I mean, that's the biggest one. So it's how much stress, if it's stressful for you, like, and you want that peace of mind, then that's something you should probably consider, if you have the means to do it. I know Dave Ramsey's big on this,
Not all
but
debt is bad debt. And
correct.
like, don't breathe Mr. Dave's name in my comments.
Oh, I can't I can't
I'm
stand
not
him
a
for a different
fan.
reason, but
Yeah, well,
because he hates veterans. No, he doesn't hate veterans, but he hates the VA loan.
well,
You know,
he may hate the VA loan. Do you know what else he hates? People that live in manufactured homes. He told them,
yeah,
he says it. It's not even on his website. He says people that live in manufactured homes are living in cars they sleep in. They'll never make any money off of the purchase of a manufactured home,
mhm.
which is not true. It's just like anything in real estate. It has to do with the location. Like, have you maintained it? Is it in a good school area? I mean, all those factors still apply whether you're buying a manufactured home or not. Now, if you're putting it in a rental unit where you're renting the land on it, yeah, then that could be the case. But if you're buying it and putting it on a good piece of land and it's in a good school district and it's in a great area, you're going to make money on it. And it isn't just from the dirt underneath it.
Yeah.
Ugh, he makes
Yeah,
me
but
mad.
if you have an interest rate below 4% on your mortgage, and you pay that off, it does give you peace of mind. But at the same time, like that money, you're potentially losing money if that money had been invested elsewhere and getting a much better return, because that's really the trade-off.
Right.
Take it in an
Right.
index fund, set it and forget it.
Yeah, right. uh, Vandervoort says, well, question. I was lucky with a 3.4 fixed rate for 30
Nice.
years. Do I just shaft the bank since inflation is 7.5? Did I just shaft the bank? Oh, did I just shaft the bank since inflation is at 7.5? Well, no, you didn't shaft them. You got what was at the market at the time. Right place, right time.
Yeah, that's good. Congrats.
Yeah, you did great. Everybody wants that. Jerry Prusa says, "Are foreign investors behind all the new construction? We are losing another mall here to biotech campus, but there's 1,000 homes in there too." Oh wow. I think it depends
Pittsburgh,
on the
Jerry,
area.
in Pittsburgh, Jerry, the biotech campuses are being built by Pittsburgh construction companies. There was one built by an Indianapolis construction company, and it was very
Uh-huh.
small, and it was like huge news, huge news. Oh my gosh, out of state investor. And I'm like, oh, where's it coming from? It's like Indianapolis. And Indianapolis has very
It's like
similar
right around the
demographics to
corner.
Pittsburgh. So I was
It's
like,
right around the
that's not,
corner.
yeah, I was like, that's not exciting, but okay. So no,
That's
that
like
is not a
saying
thing in Pittsburgh.
That's like saying in Delaware, outside investors investing in Delaware, and it's New Jersey. You know? Yeah, wow, that's so
Oh my
scary.
gosh.
It sells papers. It gets people to click. It
Yes.
gets people to click.
Mhm.
Eddie, I like the malls though. I always think are a great place for investments. If we're like, I always say, if we have all these empty malls, if they turn them into affordable housing options like condos that people could buy, I mean, what a great use of space.
You know what they turned
Charles,
ours into? They turned ours
what?
into nursing campuses, like to churn out more RNs.
Well, that's brilliant. At least they didn't destroy it, and there was a working, functioning building. They didn't just
Mhm.
tear it down. Charles says, Christina, whatever you eat for dinner later, hit it with some Chinese hot mustard or wasabi. Feel better, kid. My husband was so kind. I know this has nothing to do with real estate, but he was so kind. But I got off the plane from Phoenix, Arizona yesterday, and he like brought me and picked me up, and I had a bowl of hot and sour soup waiting for me.
Aw.
So when I got in the car, I can nosh on that. It does help. I had some miso soup before I got on the stream. Soup is the best way to go. Roger says, I live in Austin metro area, Round Rock. Oh, I know that area very well. My good friend works out there. It says, my home is paid for. I'm considering an Airbnb, purchasing another home. Any advice? Yes, Roger. I want you to go to my website and fill out the referral form there, and I'm going to get you in contact with the best agent when it comes to Airbnbs. I know him personally, and he has investments of Airbnbs in there, and he's has a community out there as well. So yeah, get in contact with me. I have it's KristinaSmallhorn.com, by the way. Just fill out that referral form, and I'll give you a call. Make sure you put in your phone number in there, and I'll give you a call. I'll tell you exactly who it is. He's fantastic. He's a good friend of mine too. Nicholas Roberts. I want to finance land as land prices are still rising in Texas. I know. I know. Then purchase a manufactured home to put on it. Can I finance a portion of the finance land with the manufactured home? This is a question for you, but I don't know if you do these. Do you do these, Trevor?
I want to finance land prices.
He wants to roll in the land in with the manufactured home.
Yeah.
After, or he's
You can.
Yeah, you do.
You can finance the land with the manufactured home. But
Correct.
can I finance a portion of the Yes. Yeah, you should be able to do that.
It's a new construction loan, isn't it? And then you roll it into something else. Is it how it works?
Yeah, I mean, it just depends on the situation and what's going on. But I mean, it's basically treated as one deal, whether it's new construction or not. So,
thank you, Nicholas Roberts. That was a great question. I get that question a lot on my channel.
Yeah, well, I know there's a lot of other questions on mortgages and stuff in the chat I'm seeing go by. I will get to, I'll answer all those after we're done. So don't worry if you guys have questions on a mortgage that's not showing up on the screen. I'm happy to answer those too.
Yeah, just like when this is published, just go in the comment section and tag Trevor in the comment sections. Just put at Trevor Smith and then ask your mortgage question, and he will answer you. Thank you, Trevor. We can't get to all of them. Eddie Royal. So, he's been on my channel for a long time. I haven't seen him in a while. Nice to see you, Eddie. He says, I have friends in their 60s that want to buy a new home. What should they do? They can buy a brand new home if they want to. I mean, I personally wouldn't buy a brand new home right now if it was under construction, unless it was finished. If they were like, this is the house, you can buy it right now, I would buy it. But if they're like, this is the house, we can build it on this lot, but you won't close for another like 12 months. I would be like, Kristina says no. The interest rates are too iffy. What do you say?
Well, it's not just that, the interest rates. It's like you brought up before, the cost associated for the builder and how your state handles those contracts, whether the builder has the right to jack up the price on you and then terminate the contract and then just sell it to somebody else. So there's a lot of things you got to watch out for when it comes to new construction, especially if it's a long-term thing. But, it doesn't have to be all the way done. If you have really good certainty, and when I say really good certainty, like, you need to have a real estate agent that really knows what they're doing and knows the market well to know if the house is going to be done in 30 to 60 days or 90 days, then I think you're pretty comfortable, going ahead under contract. But obviously the longer it's going to take, the more risk you're accepting on that deal.
Trevor, I have a question for you really quick.
Yeah.
Have you closed on any houses that weren't 100% complete? Like they were able to go to the closing table, but they weren't like 100% complete?
Haven't had the issue come up.
Yeah, we've had it here. We've done it. We've done it. Like they're waiting on cabinet.
We haven't seen any in the Charlotte area like that.
You don't really have that, do you, Tanya?
We don't.
No. Yeah, I didn't think so. It's happening in other places. Jay Adams says, is putting 40% a better option than 20% to offset higher interest rates? Tanya's shaking her head no.
No.
Mortgage guy, you give your... Go ahead, Tanya.
Take that 20% and stick it in an index fund, and ensure you have 3 months, of emergency expenses set aside. There's no point to it, because if inflation is 7% and your interest rate is 4%, then stick it in the market and let it do something.
Yeah, that extra 20% down payment is probably only going to lower your mortgage payment by $50 or $100 a month,
Yep.
And so you're not really, yes, you are saving because you have a smaller loan, and over the life of the loan, yes, you're going to pay less in interest. But at the end of the day, the savings is really only that $50, $100 a month. Whereas like Tanya said, if you have it, at least in savings, if an emergency comes up or whatever, now you have that cash accessible and ready to go. You can also go ahead. I was going to say, you can also use, a portion of that to potentially buy down the rate. But I would just caution that, if you're going to do that, make sure you're calculating your break-even time, how long it's going to take you to recoup the savings from that. So if you pay $3,000 to buy down your interest rate and you're only saving, $50 a month, that's going to take you basically 5 years to break even. So it's just something that you need to look at rather than just trying to chase after the lowest interest rate possible.
I will say, if you really want to be smart, just make it extra house payment a year. Yeah, every year you take off a few years off
That
your
too.
mortgage. Yeah, people do it all the time. People do it all the time. Jay says, question, is a fixed rate untouchable? So say you have had your mortgage for about 5 years. They can't renegotiate your mortgage
Right.
unless you have an adjustable rate, right,
Right.
Trevor?
Yep.
Yeah, it's untouchable.
you're-
Your monthly payment might go up because of taxes or insurance,
Right.
but your mortgage is for 20 years,
Yep.
15,
You're
20,
locked,
30
you're
years.
locked in.
It's in there.
Yeah, they can't all of a sudden say, you know what, we changed our mind. We want you to pay 4% now. You're paying 3.5, but you know what? We decided we need more money from you. They can't do that. That's what all that paperwork says, that big thick thing is like, that's non-negotiable. This is what you owe us. But I will say this too, that all that paperwork also says, if you don't pay us, we're taking your house away.
Right.
That's what most of it says. S says, is it still a seller's market? Many offers and sellers can ask for an inspection to be waived. Many offers and sellers can ask for inspection to be waived. It's a seller's market here. I don't know of any place that isn't. What do you say, Trevor?
Yep, absolutely, seller's market, and sellers can ask I think they mean the sellers can ask the buyers to, they were looking for a buyer that's willing to waive inspections, but sometimes they do and sometimes they don't.
So the Pennsylvania Association of Realtors lead attorney, Hank Lerner, came out and said this about maybe 8 months ago. And since then, I have seen substantially fewer offers without inspections. And sellers are also wary of it. So Hank Lerner has said, if you're a seller and you took an offer without an inspection and you get sued, you're out on your own. It's all on you. You should have had an inspection. You should have asked the buyer to get an inspection, or you should have paid for one yourself. So what we're seeing in competitive situations is no contingencies except for a home inspection, but the buyer is responsible for the first X dollars in findings. And lower end homes, it's like 2,000. In the middle priced homes are 5,000, and the higher end homes are 20 or more $1,000. And so what they're saying is it a foundation issue? Is there a major structural issue? Is there something that is uninsured? Something very major that they would walk away from it. If that exists, then they will opt out. If it doesn't exist, then it gives the buyer peace of mind, and it gives the seller peace of mind that they're not going to come back and get sued and be 100% liable, essentially.
Yep.
That's a good question.
Walter liked your question. Walter Pancake. This kid says, if the USA ends up in a conflict with Russia, how would this affect the U.S. real estate buyers and sellers? I have no idea. I'll flat out say I have no clue. The thing is that if you had told me at the beginning of the pandemic that people would go crazy and want to go into strangers' houses, not knowing what their infection status was, and still want to buy houses, I would have told you you're absolutely insane. No way are a bunch of people going to do that. Who freaking knows? What do you say, Trevor?
Yeah, who knows? I mean, it depends. What kind of conflict are we? There is a little bit of conflict going on. We're not in conflict with them, but yeah, I don't know. And even after 20 years of being in the military, I don't don't know.
Well, we never know anything. Walter. What do you say, Tanya?
I was laughing at the next question. What do I say? We have no idea. And also, there is still going to be the transfer. I believe firmly that there's still going to be the transfer of value from commercial to residential real estate. When people say, why is real estate so crazy? Have you seen commercial rates? Have you seen commercial vacancy rates in downtowns? They're through the roof. 70% of knowledge workers are still working from home. So I don't think that's going to change, even if we're involved in a cyber war with Russia.
Speaking of that, I think it would be a really good idea, and I've said this since the beginning of the pandemonium, is this, but they took some commercial areas that are really close to residential areas, turn those into residential zoning, and take those office buildings and turn them into condos and townhomes, more affordable housing options, which everybody freaking needs. Jerry Prusa says, is Walter ready for terrorization from ourselves? You know what? This is no lie. Totally off the subject of real estate. But Walter wanted nothing to do with Marcel. And Marcel is like, please be my friend. Please, please. He jumps in his room. He's like, hey, are you ready to be friends yet? And Wilcher's like, no. And he's like, okay, I'm going to leave. But he's a nice kitty. He just he's not ready to be friends yet. He's not ready to be friends with poor Marcel. Mr. Machine says, Mr. Machine 1 says, is the supply shortage only happening in the U.S. for the home building essentials, or is nations? It's all over the world. Get a good glimpse at Australia right now. They'll flat out tell you it's a nightmare there. Their home prices are even gone up even higher than ours have, because they did it. Do you know what they did? I don't know if you know this, Trevor. They right at the beginning of the pandemic, they offered a buyer's incentive to get people to buy homes.
Oh, I think I remember you talking about that. Yeah.
Yeah. It was terrible. And our home prices are bad, but theirs are even worse. Those are even worse. Kriya and the Kid question. I'm looking at a VA new construction modular on a VA disability pre-qual of $250. No debt in central southern tier New York on 10 acres. Builder says they can make it turnkey by 2022. How do I it cut off. How do I? You know what? Go ahead and message me on my website. Go to KristinaSmallhorn.com and fill out the referral form, and I'll give you a call if you leave your phone number. If not, you could leave your email address, and I'll get a little closer to your question there. I need to know some extras on there. Oh, look, Eddie pulled it up. I didn't know something, by the way. I put a picture, and look, you can see my feet. And apparently that's a thing for some people to show feet. My daughters are begging me to take off my picture of my foot. To book a call with me, you just go ahead. I know. Book a call with me. Just go under there, and it says book a call. There's also now there is a new chat bot on there. There's a chat bot feature that I now answer. There was a mess up with that, but now it's all been straightened out. So you can message me on the chat bot. So Clifton Charles says, is it true that when doing seller financing, you can tell the buyer you want to finance 20%, then take the check to the bank for the other 80%, then you're into a home for 0% down? Have you heard of this? I don't know what this means. Do you, Trevor?
I think they're asking the seller's going to carry 80%.
The note?
Yeah, the seller's going to finance 80%, and then the buyer's going to finance the other 20 on their own.
Can you do that? Can you have two mortgages in two different names?
Well, so it's really two separate loans that we're talking about here.
Right. And
so most lenders are not going to be secondary on a 20% note when the seller has 80%, in the primary position. So you can certainly go get a hard money loan for 20%, but you're not really buying the home with zero down. I guess. Well, I guess you are, because you're not putting any of your cash, but if the seller is willing to carry 80% and you go get a hard money loan for the other 20%, you could do that. It's keeping the banks out of it.
Yeah, that would be difficult, I think, to find.
I feel like you're accepting a lot of risk, because my question to you is like, why would you pursue that? Is it because you have zero money to put down? And if you have zero money to put down, then you might want to look at some different options, in terms of purchasing a house, because you could, that could go south on you real quick.
Not only that, you could think about looking at RD loans, rural development loans, if you're in a rural area. Those are 100% financing, so you can look at that.
or VA loans if you're a veteran.
Yep. Lamar says for Yeshwath Reddy, is it worth buying a new construction home in this current market? I already answered that, and no, I would not do it. I mean, I don't know how you guys feel, but I would not, unless that house is built and ready to be purchased. I would not purchase a brand new house. That's just my personal feeling on it. How do you feel about it, Trevor?
Yeah, I mean, like we talked about, unless it's already done or really close to being done, I wouldn't be doing it.
Yeah, I wouldn't.
The answer is it depends on the builder.
Well,
that
depends on the builder
and the contract. If they're not going to negotiate the price up, if they say yes, this is the price, no matter what happens to I don't know a builder that would do a builder's contract like that though. OV says, how accurate are Zillow's estimates in the real estate market? Oh no, Tania's having a visceral reaction. No, Zillow's estimates, they call them a zestimate because that way they can't get themselves in trouble because they know they're not worth the money that they know they're not. They've been sued so many times about their zestimate. They've even like talked about taking it off the screen because all they're doing, it's just a computer algorithm. They take your house, they stick it in the middle, they draw a 5-mile radius around your house. They take all the for sale and sold and pending listings, and that's how they determine the value of your house. It doesn't matter if this house is a piece of junk. It doesn't matter if this house is like highly upgraded to the hilt. It doesn't matter. They just take it all, and then that's how they estimate your value. Sometimes they're pretty close, sometimes, but in a good portion of cases, they're garbage.
In half the times of my listings, they've been more than 25% off. And so I manually request, like the seller has the legal ability to manually request that their home value is hidden. And then other times, if it's irrationally, high, then and I show the seller the comparables, they're like, oh, wow, someone's going to think they're getting a great deal. It's so not realistic, especially when it pulls from different school districts, which is often.
And lenders, right, Trevor? Lenders don't use estimates in order for their for their appraisals, right?
No, yeah, this is how Zillow is, shutting down their iBuyer business and how they lost so much money.
Yeah, because they use those stupid Zestimates to buy houses, and they did themselves in. Kind of serves them right. Kevin Strong says, no one is talking about the consumer debt that will slow down the housing market. The thing is the people that are buying houses don't have consumer debt. The people that are buying houses have cash. They have awesome credit. They're scooping up houses. What do you say, Trevor?
Yeah, the buyers today are so much more qualified than they were 15 years ago because of the lending standards that have tightened over the years, especially after the last housing bubble. Credit scores required to qualify are higher now for loans. The debt to income ratios haven't really changed that much, but the all the conditions that go with the loan, it's where we're seeing buyers today. They're bringing a lot of money to the table. But what's interesting, Kristina, you talked about this earlier with like the baby boomers. People thought they were going to sell off their houses and stuff. But what we're seeing is I'm seeing more gift funds, coming from parents. So they're taking some of that equity out through a HELOC or through a cash out refi, and they're gifting that, to their kids or their grandkids to help them with the purchase of a house.
I didn't even think about that. That is true. That is a real thing. Yeah, because they got all this money in it. Emma Wallace says, are land lots increasing in value as fast as houses? We talked about this early. They don't increase as quickly, typically, as the regular housing market, but every housing market's going to be different. One lost dude. That's a funny screen name. Question: how are builders getting certificate occupancy permits with a fake garage door, 7-month wait, 6-month wait for appliances? I don't know. I wish I knew the answer to that because I saw one that closed and they didn't have cabinets in the house. Like they didn't have cabinets. There was no.
I remember an article about this. It was talking about, the homes are being sold without garage doors. And I think in that article, they were saying that the builder was basically just putting plywood. So it wasn't really a garage door, but they had to seal it off, or do something.
Came in.
Yeah. Yeah. So they're finding workarounds. I haven't seen it happen with any of our loans, but there's always a way.
Thing in Louisiana. It's not a thing here in Louisiana. It's not. No, there hasn't been a house that I've seen that hasn't sold with a garage door on it. But a group of builders here got together when there was like a lull in the supply chain problems, and they got together and they bought a boatload of drywall. They bought a boatload of mud and all this other supplies that had had a problem at the beginning of the pandemic, and they rented a warehouse, and they're working together for these supplies. So they have them, so there wouldn't be a delay in construction. Now they're bigger, small builders, but I mean that was way to go, way to work together. How super smart. CC Moon says, this is a question for you, Trevor. Do you think people are paying more than 35% of their annual salary towards their mortgage? What is your ideal percentage that should be go towards the mortgage? I've heard 25 to 33%. What do you say there, Trevor?
So the NAR will tell you that the definition of affordable is if it's below 25%,
Okay.
so, and that's your mortgage plus your insurance and taxes and everything. So if you can keep your ratio under 25%, that's pretty good. We have seen, if you look at the statistics, the percentage of income that's going towards the mortgage has been slowly creeping up. I think that trend is going to continue as home prices continue to go up, and especially as rates continue to go up a little bit. I think if you're going over 35%, now you're starting to push into, even though you can potentially qualify, you're starting to get into that potentially house poor category, and I was just reading an article where now there's a good percentage of buyers that are taking on a second full-time job just to cover expenses, even though they could qualify for the mortgage. It's with inflation and everything else, it's all the other expenses that they're having to deal with to afford that house. So you definitely don't want to find yourself in that situation.
Even health insurance is a lot more than it ever has been. And like things that my health insurance used to cover, they don't cover anymore. For instance, a strep test. Like you have a blazing sore throat. Your throat looks like a hamburger meat. But your insurance company says, we don't cover strep tests. We'll cover a flu test, but not a strep test. Well, how dumb is that? How dumb is that? So all those little expenses that, you didn't normally have to pay, now all of a sudden you have to pay. You pay more for insurance. Now you're paying more for medications. You're paying more for tests that you wouldn't normally have to pay. I mean, all these little things are popping up, and it makes a big difference in people's, overall weekly incomes that they're trying to live off of. So yeah, it's messed up. Matthew Cole says, Kristina, I watched your video on modular versus manufactured homes. As a toy, have just spoken on a price of land. So you still feel this is way better to go? I just watched your video on as
you have just spoken on the price of land. So do you still feel this is a better way to go?
Right now, I don't know if you watched my most recent one. Modular homes, manufactured homes, with buying a piece of land. It's going to take too long for your home to get to where it's at. Unless you can look at the manufactured home company, walk on the lot and say, I want this one right here. And that's the one that you want. And they can deliver to your house. Not that they're ordering it for you and it's going to be delivered X amount of time. Who knows when that will be? Because those prices, by the time that it actually gets to the property, could change, and so will the interest rates as well. That's the same as a modular home. Modular homes are even further out. Like I was saying 12, 15, 22 months for manufactured homes. Modular homes are an average of 15, 22 to 24 months out. Not only that, you got to find contractors that are going to be able to build those modular homes by the time that they need to be delivered. It's been a real mess. Right now, I would wait. I wouldn't buy anything new unless it's available to be put in front of you right now. And so that way you get into the best interest rates possible. That's my advice. MI says, question, building on land owned was offered to use equity in land as a down payment. What percentage of cash should I add to this? That's a Trevor question. I don't really understand the question. Go ahead, Trevor.
Yeah, you can use the equity in land. So I don't do any of these types of loans. We don't do any new construction, new build loans or land loans. So that's something that you definitely want to talk to another lender to make sure you understand. But yeah, you can basically, what they're saying is they've gone out, they've bought the land, and they want to use that land as equity, against the loan for building the house on there. So, and I don't know what kind of percent of cash you should add to that, because it's going to be very dependent on, the land value and the lender terms, for what you're looking to do. So I would check with a lender that does those types of loans.
And talk to more than one. To more than one lender. Don't take one guy's advice and say, oh, that's it. No. Does Kristina have a code? She sounds like she has a code. I do have a cold. I have a bad cold. Eddie is giving us a little backstage thing. It says, can I make a plug for the PYT program or oh no, hold on. That was oops, sorry. Go ahead, Trevor. Go ahead and make your plug.
So because I know some of your viewers are going to be interested in this, because like there's two big problems like right now when you're trying to buy a house. Number one, you're competing against cash offers, and number two is just the volume of the competition out there. And so, what we've really been trying to do is help people try to stand out when it comes to submitting their offer. So the two things that we have, that I think are worth considering, whether through us or somebody else, I always recommend, if you're going to get a loan, go ahead and get fully underwritten. So don't just get a standard pre-approval letter. And the way we do that is we have something called Protect Your Transaction. And so what this does is it takes your loan file all the way fully through the underwritten stage of a loan. So we look at every single thing that there is. And once you're done, you get issued a certificate that gives you a $15,000 performance assurance guarantee that we're going to be able to close that loan. And not only does it do that, but now when you go under contract, we can typically close those as quick as about 10 to 14 days, because really the only thing that we're waiting on is the appraisal. And so instead of you going under contract and telling a seller you need 30 days to close because you're going to do, all the standard loan paperwork afterwards, get fully underwritten. And now you have a little bit more peace of mind that you're going to be able to complete the transaction. And you have a performance assurance guarantee that, if for some reason we can't close the loan, you're going to get that $15,000. So
they just write you a check for $15,000?
Yeah. So what happens is once you're PYT approved, and it doesn't cost anything to do it, the company will issue you a certificate for $15,000 that if we fail to deliver on that performance, we're just going to write you a check for 15 grand. And what you can also do is you can assign a percentage of that as earnest money towards the seller to give the seller peace of mind that the loan's going to be able to close. And so out of that 15 grand, you can say, hey, I want to assign, I'll keep 10 grand. I'll assign 5 grand to the seller. And then basically the seller, then if the contract falls apart because of our fault as the lender, the seller is going to get that extra $5,000 in earnest money. So there's assurance for both parties there. And I think it's a really strong benefit, especially because you can close faster. And now all of a sudden it's not just your standard pre-approval letter. You're coming with a fully underwritten loan going to the offer table.
Yeah, but you can't quit your job the day before and think that you're going to get that. It's like that. I had that happen. Guy freaking got fired the day before closing. Didn't tell anybody. Thought the title company wasn't going to know. You don't get your $15,000 if you quit your job or you get fired.
Oh,
right? Is that right?
Funny.
Yeah.
Right.
Don't go buy 2 new cars.
I'm good. Like, I know that there's another way for people to reach you. Eddie, can you pull up Trevor's YouTube channel? Because he's on the old YouTubes. So if you guys have, you can always
I make a video from time to time.
Yeah, he does. He does a good job. YouTube. So
The interwebs.
look, this is him. Trevor Smith, the mortgage wingman, right here. Do you know why he's like that? Because he was in the Air Force, right? Isn't that correct?
That's right.
Yeah,
Very
he's
cool.
a smart dude.
I like that banner.
World's greatest fighter jet.
Yeah, well, there you go. And he knows all the ins and outs. And not only that, I don't know if you guys know this, but Trevor has his real estate license as well. So he's a stinking realtor like the rest of us.
Yeah.
So he knows both sides of the transaction, but he mostly is the loan guy. So just to FYI. Lumbar says, for Trevor, why are F-15 pilots so much skinnier than F-4 pilots? And thanks for keeping the bad guys off our back.
We don't drink and smoke as much.
As much being the operative words in that sentence. That's funny.
My dad was in the Air Force. I don't know if you know that, but he was a guy who read the weather. Oops. I don't know where that came from. That was not what I meant to share. Whoopsie. That was not what I meant to share at all. Let's do a little screen share here of somebody else that you guys probably want to know about. And if you guys haven't checked out her website, this is Tanya Cool, who is the coolest person I know. She's cooler than the other side of the pillow. real estate agent of Pittsburgh. You guys can reach out to her on her website. She has all of her testimonials on there as well. And look how cute she is. You're just going to fill out this contact form right here. Tell her that you're not a robot, and she will gladly listen to your real estate needs in the Pittsburgh area. So everybody, I want to say thank you to you guys that you spent the whole day with me listening to my snotty nose. And we struggled through this together. We had some really good questions today. And the housing market isn't going to get any crazier. That's for sure. So do you have any parting thoughts there, Trevor, for everybody on the
this
YouTube audience?
This has been awesome. I really appreciate it. I love the opportunity to kind of answer some of these questions and really see what people are thinking about. Obviously there's a lot of concerns right now with the market the way it is and with interest rates and stuff like that. So any chance I get to kind of share those opportunities, there is another program we have. We don't have time to get into it, but it is a cash buy program that allows you to compete against cash offers. And it's much better than Ribbon, hands down. So I'm going to have a video out on that soon on my YouTube channel. But you can certainly message me for more details on that.
Way to go. Tanya, you got any parting words for everybody?
Just like diving deep into the conversations every week, because that's how to be best for it. Just makes my brain go in different directions.
I love it. I have the best community too. Honest to God, I'm always very grateful to the community that's out there and has discussions, and I just love them. They're such good people. We get some trolls that come in every once in a while, but they make things interesting. That's why I have the best moderators. I want to say a thank you to all the moderators in the chat who always clean up the chat, make sure that keeps people in line. We're not going to handle that. Just like the military there, Trevor. If you start doing live streams, have them all on it. Have yourself some good moderators. Tanya, Trevor, thank you so much spending your afternoon with me. And I'm going to say adieu because I'm going back to bed. My Advil has worn off and my head feels like it's pounding. And it has nothing to do with the cat. This is a true on cold. So everybody, thank you so much. Bye, everyone. Say goodbye. And we've got the music now. Now we can dance. Normally I would dance without music, but Eddie's got the music going.
I'm a military guy. I don't dance.
Oh, you don't dance? You can dance if you want to. You can leave your friends behind. Oh, you don't dance? You just smile?